Hi, everyone. Welcome back to Eighth Wonder Investing. Thanks for spending some time with me. I hope you'll find it worthwhile today. So, I wanted to talk to you today about the impact that inflation can have on various aspects of financial life and find out whether it's a big deal or not, whether it's something we should be watching, something we should be caring about. So, what is inflation? Um, in general, it's the increase in prices and fall in the purchasing power or the purchasing value of money. Inflation is viewed as a positive when it helps boost consumer demand and consumption and driving economic growth. A lot of central banks, including the Federal Reserve and the Bank of England, are seen as trying to maintain inflation around 2%. This this can be this can be hard, and it's like trying to hold a flat circle with one hand whilst trying to keep a ball dead center in the middle where 2% inflation lies. So it's going to move around a bit, and you have some close calls, and maybe the ball will fall off sometimes. There's many levers you can pull to affect inflation. Everyone everyone should be aware of inflation, but I don't remember learning about this at school. It can be such an invisible, destructive force that it's easy not to take any notice of it. Every penny you earn in one year will be devalued by the rate of inflation in the next year, and then again in the second year after that, and then the third year. Whatever the inflation rate is, that penny, that value will be devalued by that amount, by that percentage of inflation, and on forever. And of course, this works in reverse as well with deflation. For years, I would be content if I got a 3% salary increase, as I viewed this as the average. I never once thought about inflation and how that sent my real salary increase down to zero, or even negative. This will it will depend on where you are in the world. But in the UK, where I'm from, inflation just hit 9%. If I get a 5% salary increase, this would be higher than the average, and maybe I would have been happy about this without thinking about inflation before I really understood the impacts of inflation. But with inflation at 9%, I actually just took a 4% pay cut. Now, think about that for a second. Your boss comes to you and says, you've got a 5% salary increase, and you would have to be upset because your income just went down by 4% in real terms. It's crazy, but it's true. So I just want to take you through some kind of more visual examples and some numbers to put this in context. So, for example, how long does it take to lose 50% of our money, essentially lighting it on fire in different inflationary environments? So, here's a simple table where we have inflation and then the years that it takes to halve your money, whatever value you start at, how long it takes, how many years to halve in value. So at a 2% inflation rate, the value of your money will halve every 35 years. Okay. At 5%, we're going to be halving the value of our money every 14 years. So what that means is at 5%, for example, in 14 years, you better hope your salary is twice as much as it was, at least twice as much as it was 14 years ago, because that will be essentially equivalent. At 9% inflation, which is what we have at the moment in the UK, if that persists, the value of your money will be halved in only 8 years and at 10%, it's 7.3 years. So let's look at this in context of the S&P 500. So this is a site called Macrotrends. It's a site which you can put in stock tickers from the US and find out lots of information about a particular company, but they also have charts about other things that might interest you. One of which that I'd like to share with you today is the S&P 500 index over a 90-year time period. Now we're going to need to turn the log scale on because the data back, decades ago looks like nothing. So if we turn on the log scale where every single increase and decrease is weighted equally percentage-wise, what I want to focus on with you today is this period here. So particularly from this peak here to this trough here. So let's just zoom in on that. So I've just cropped it in here. So what I want to look at is this period from 1968 to here, 1982, where the market went nowhere. Yes, it went down and up in between, but if you draw a straight line, the market was at the same place 14 years later. Okay. So you'd think, right, it's taken me 14 years to go nowhere. But what I love about this chart is you can look at how it would look if it was inflation adjusted. So if we turn this on, we suddenly get a very different chart in front of us. Here's that peak from before. And there's the 1982. It looks like the index has suffered a massive decline when really it was flat in nominal terms, but in real returns, because of inflation, this is what we're looking at. So the inflation rate during that time, here's one I prepared earlier, again from Macrotrends. So 1968 to 1982, inflation in the US, this is what it looked like. 4% was kind of the minimum, but we're up in the 11% and the 13.5%. I've actually put this again over here in this chart. So here's the inflation rates. And over that time period, there was an average of 7.4% inflation. Remember our table from before? What does 7% get you? So 7% inflation, it means your money will halve in 10 years. So what actually happened? So when you look at this inflation adjusted index, we went from 885 down to 317. So from 885 to 317, that's a fall of 64%. And that took 14 years. So inflation was on average 7.4% in that time period. At 7%, we would halve in 10 years. But what we've done is we've gone down more than half in 14 years. So there's just been an extra 4 years on there, basically. But you would never look at this chart and adjust for inflation. There's no, when you look at the stock indexes out there, the adjust for inflation button is not there. And if you didn't know about the effect, if you weren't factoring in the effects of inflation, it looks like you've gone nowhere. Again, that's not a great place either to be, going nowhere in 14 years. But just look at what happens if you factor in inflation. This really got me when I saw that, because on the chart, it looks like a 14-year period of consolidation moving sideways. When you factor in inflation, which is real, it's a real thing. It happens. It will devalue your money. You will be able to buy less with every single dollar, with every single pound, year after year, by the rate of inflation. This is what can happen. And this is what we're in a period of high inflation at the moment. Whether it will be transitory or not, whether it will continue, no one knows. But inflation is definitely something to be aware of. And I just wanted to put some numbers around it to add some color to that so that you have a better understanding of that. Say inflation is 3 or 4%. If you're passively investing in the S&P 500, for example, and again, nothing's guaranteed, markets can do anything, and I don't know what's going to happen in the future, but looking historically with dividends, the S&P 500 has returned about 10%. But with inflation, you need to knock that down by 3 or 4%, whatever inflation is over your time period of investing. And this is why in value investing, I try to target a minimum acceptable rate of return of at least 15%, because then I get a good return even when you factor in inflation. And that's also why practicing value investing and learning these principles really helps you grow your wealth in real terms, because inflation is always there eating away at your money. And especially in environments like this where inflation is very high at the moment, practicing good sound value investing and aiming for high returns and buying a £10 note for £5, buying a $10 bill for $5, and buying it cheaper still as it goes below 5, you can't go wrong with that. And your rates of return are going to be far superior to passive investing. So yeah, I just wanted to highlight to you guys the effects that inflation can have, and what you can kind of do to counteract that. Because I know if you didn't know this before, if you really think about the effects of inflation, it can be quite depressing. You know, there's this invisible force destroying my money. What can I do about it? Just having the knowledge that it's there is one thing. That's really good. Then you can try and build the skills that work for you to fight against that. And one of the great things to do that is with value investing. So like and subscribe, stick around for more videos on this channel, because we'll be going through all that. We already have made some videos, but there'll be more to come on this great journey of value investing that I'm going through, that I'm taking you through with me. I appreciate you sticking around today to the end of this video. I hope you found it worthwhile and enjoyable. I'll let you get back to your day. And with that said, let's all go out there and become super investors together. And I will catch you on the next one. Take care.